diversified funds are the best way to go. Like you're talking to someone who, when I started trading, I put my entire 401k money in the 90s into AOL. And it went up by 4x because
Wow.
it was the greatest thing ever. Everyone used AOL until AOL became worthless. And I learned my lesson that you never want, whenever you think something can't lose, it can. Whenever you think there will be no competitor, there will be Blockbuster, Netflix, you know. And I was like looking at the sign of the times, like AOL was the most used site ever until Google came along. And then Google destroyed AOL. I'm sorry, Yahoo before AOL even. Yahoo beat AOL, Google beat Yahoo, then Facebook came and beat that. And like, when you look at it from that point of view, there's always something new. Anyhow, so I like being diversified for the long term.
Hey everybody, welcome back to the show. I have an awesome guest on today, Adam Mesh. Awesome story behind me and Adam meeting. I'm going to tell you that in a second, but Adam is a professional and he's been on so many shows. He's got such a background when it comes to options trading, to Wall Street, to finance. So what I hope today is I hope that you get an amazing education and that you walk away from this show informed. If we can do that for you, then I think Adam and I would agree we've done our job. So I met Adam because I am one of his clients. I was looking for somebody to show me how to trade options and how to make some money. And honestly, I'm clueless. Like I have no idea how options work or how to really work the stock market. So I stumbled on him and I've been working with his company for like 6 months. Adam and I have never met. He didn't even know before the show up until about 20 minutes ago that I was a client of his. But I want to tell you something. You guys are going to love this. So Adam, welcome to the show.
Thanks, Matt. I'm excited to be here. And yeah, I didn't know that you were a member of our community. That makes that even better. And also the fact that we had a good start to the year. So come on.
I'm telling you, right? It's like we're winning already. Yeah. So a couple of things that I want to mention. One, you've written a book, and that book is called The Average Joe's Ultimate Beginner's Guide to Stock Market. You've been on so many shows, right? You've been on CNBC Squawk Box. You've been on Fox Business. You've been on the Today Show, Tonight Show with Jay Leno, like Ellen DeGeneres and Regis and Kelly, like goes on and on. What is it that drew those people to want you on their show?
I think it's, well, the story is actually pretty interesting, but in terms of finance, it's the ability to simplify it and explain it in a way that anyone could understand. I think that's what I'm good at. Some people could trade, some people could talk about trading, some people could write about trading, and I'd call myself a triple threat in that sense. I could talk about trading, I could write about it, and I could trade. But I don't even know if you know this, but I was always trading since 1997. I was trading, and so there's two kind of coincidences that happened to me, acts of fate, as you would. Nelson Schwartz from Fortune magazine came to the firm I was at when I was trading, and he said to the owner of the firm, "Who should I watch trade?" And the owner was like, "Go watch Mesh." And because I was a very active, good trader at the time, and so he stood behind me, and I made almost $20,000 in 15 minutes trading plug. It was like the day trading heyday, and he was like, couldn't believe it. He wrote this amazing article in Fortune. That was like a feature story that everyone saw that literally couldn't have made me look better. And then a year later, they did a follow-up on my ability to train people because I had a lot of people I had trained that were doing well. And again, it was like all you could ask for in terms of, Fortune magazine writing great articles about you. Separate from that, and I don't know if you know this part or not, I ended up going on a dating show on NBC.
No, I didn't know that. No, I didn't know that.
Okay, yeah. So I went on a dating show, and it ended up being it was one of the first ones. So in the finale, 30 million people watched it. And we went to my hometown, and all of a sudden in my apartment, they saw the Fortune articles. And we had never talked about work on the whole show. So they're like, "Wait, what do you do?" I'm like, "I own a trading firm." And they're like, "Wait, what? And you're successful?" I'm like, "Yeah." And so then it was on right after Friends, and so they talked about my trading success on NBC, and that led to thousands of people writing in asking me for help in the market. And then I got a follow-up show where I got to choose the girl. There were like 20 girls to choose from.
Get out of here.
And on the show, we had like a trading competition sponsored by Schwab, and I taught them how to trade. And so it just gave, between the Fortune magazine articles and the NBC shows, the exposure just, I stumbled into this industry. Like I was just a trader, and then people asked me for help, and I started answering questions. And
you know what the thing is, man? Like you have, I mean, just listening to you and just talking to you, like you definitely have a magnetic personality, right? So it's like you're upbeat, you're lively, you're smart, like you know what you're talking about. And I just Googled that while you were talking, like, because that's the one thing I didn't catch, that you were on a dating show. That's really interesting.
Yeah, long time ago.
But it's so interesting because being in the business that that you started out in, the way you described it, that personality does matter. Like really being able to like, there's a lot of different aspects, being able to withstand the ups and downs, like the volatility, but also being like upbeat and positive, right? It all matters.
I think, and you come across the same way right now in speaking to you. It's being authentic. I what I'm thinking, as much as I could tell you that story that makes me look good, I'll tell you 50 stories that make me look bad in the same exact energy. Like, here's the worst trade I ever made, it's authentic. And I think people connect with that. Like,
they really do. I was sort of digressing. I have like a coach, right? Somebody to hold me accountable. When you're on your own company, it's like, who's holding you accountable?
Sure.
So I have a Wednesday morning call. So I'm on the call with the guy this morning, and we were just talking about YouTube shorts and how important it is to really just, stay in line with like the trend of like what really matters now. And we got on the topic of like lessons learned. And I just said something about like my experience, and it was, I forget what it was, but the way that I said it, he's like, that's it. Like that authenticity, the way you just said what you said, that's what has to be put out there. Like, that's what people connect with. And I'm like, I know. It's like, you're 100% right, but it's so much easier during a conversation that's not scripted, where like, you don't have a show on and you have an agenda. When you're just two guys talking, it's so much easier just to be yourself. It's when that camera flips on, it's like, wait a minute, am I supposed to be like, on in a different way? It's like a weird thing that happens when you're in front of a camera.
I've always felt very good in front of a camera. Like I'm more myself, I feel like, knowing that there's a camera on.
Really?
Yeah.
You're perfect for TV. You should check into that. Listen, I really do want to get to some really valuable information, right? So just like I shared with you how I found you, I'm the average guy. I've read books, I've tried to figure it out, and finally I'm like, all right, I don't get it. And it's kind of cool that there are people out there like you that speak my language. Like you're an expert beyond experts, but you also speak my language. It's like the average guy doesn't know what to do. So if we're talking to the average person right now who maybe wants to get into options trading and wants to really like maybe make some extra cash flow, even small amounts, start off, can you just tell me what is options trading? Like, what should somebody even know? I mean, I'm not just buying and selling stocks. It's different.
Sure. Options is the right to own a stock in the future or be short. So to use it like a real estate analogy, if you're like, oh, I know that home is going to be worth double in a year, right? But right now that house would cost $1 million, and you don't have $1 million to buy that house, but you want to be able to profit from the value going up to $2 million. Imagine there was an option where you spend, I don't know what it would be, but like, let's say it was $10,000. And so now you're only risking $10,000. And in a year, if you're right, you could flip that house, right? You could sell the option that you own for $10 for a total increase in value. You would be proved right without ever owning the house. You never have to own the house. So if it was a $10 option and the value doubled, and now it went to, if it was it would be worth, if the home was worth $2 million, I'm using like weird examples here. If you pay $10 for the right to own the house at $1 million and it was worth $2 million, you'd still profit that $1 million, right? So let me make it in stock so it'll be easier. So I'm just looking at my screen right now.
Before you go where you're going to go, I got to tell you something.
Yeah.
What you just said is exactly what I did. So it actually registers. I rented a house in Florida.
Yeah.
And I bought an option to buy it. And I paid $10,000 for that option to buy the house. I exercised that option a year later. The lease came to an end. So I exercised. I had already locked in a sales price of X amount of dollars. And the people that when I exercised it, the market had gone up a lot.
Yeah, they didn't
I was locked in at a price that was $800,000 lower than what the value of that house was a year later. Because it was a crazy market. That's
exactly what it is. So like, let's take Uber right now. Uber's trading, I have my screen up behind us. Uber's trading at $28.21 on this call. Now, if we thought, oh my God, last year was terrible, this year's gonna be so much better, Uber's gonna be back at 40, right? Now, we could go out and let's say we think it's gonna be there halfway through the year in June. Well, the right to own Uber at $27.50 is $4.60. Minimum number of contracts is 1, which equals 100 shares. So you could risk $460. And if Uber goes to 40, you're going to make 900. If it goes there faster, you'll make even more because you'll still have premium left on that trade. But here's the thing. If Uber went out of business and it went to 0, you're only losing that 460. You're not obligated to take ownership. If your house had gone down $500,000 in value, you would have walked away having.
I would have walked away.
Lost that option.
$10,000. I walked away.
So on one hand, options is a cheaper alternative to predict and take action on the market. I don't want to say it like it's gambling, but in that sense, like if you think the price is going to go higher, you buy an option versus a stock. It uses less money. But the way I've learned to use options, and the reason I love options is because of the premium collection component. Whereas you could, instead of needing it to go up, you could just need it to not go down by that much. So
it sounds so simple. And now that I've been doing it for a while with you guys, it does seem simple. But at first it was so confusing. It's crazy how confusing something so simple is.
And I've met really smart people that are confused by it because it's just, and I get that though. And that's why I can explain. So
exactly.
So I'll give you 2 ways of explaining it. Like Uber again at 28. Now let's say, I think it's going to go to 40, but worst case, I think it goes to 25. So I could sell the June 25 put for $2.25. So I could take in $225. That's just 100 shares. And now, as long as Uber doesn't go down 3 points in the next 6 months, I keep it. I keep that money. If it went below that, I would own it $3 lower than where it is now. But we can protect ourselves too. You could buy insurance on that trade. So if I sell Uber at 25, I could buy a 20 put for protection. All right. Now I just set the trade up where I can make $135 as long as Uber's trading above 25 in 6 months. But my worst case, even if Uber went to 0, is I would lose $365. Now, why would I risk more than I'm willing to make? Because 135 on 365 is around 30% on my money, and the probability is 83% that I'm going to be successful on that.
Which makes it almost a no-brainer.
It's like this. This is the best way to explain it. Remember Mike Tyson? Everyone knows Mike Tyson? Okay. Imagine if every Mike Tyson fight, instead of betting on when he was going to knock someone out or whether he would win or not, you just bet on him not to get knocked out.
It's almost a guarantee.
Right. And then other than James Buster Douglas, right, which when he gets knocked out, you should lose more than you would have made on all those other fights, though. But you would have made so much along the way, and you would have protected that one. So you wouldn't have gotten completely knocked out. You would have just taken a loss, you know? even when like he lost to Evander Holyfield in a different way, you wouldn't have lost money because it wasn't knocked out. That's what it is. You're the house, and you're using math to be successful.
And you touched on two things. One is time factor, time going by. And so I do want to touch on in a second the idea of what's happening around us, right? Because things are changing so quickly. Buying a stock and owning it with all the volatility that's, well, I guess not volatility, the uncertainty of what's happening around us with the market. How is this different? Is it different?
Are you talking about
In terms of the volatility, the interest rates going up and inflation? I mean, you're kind of in and out of these things quicker, so that's less of a factor. I mean, is that a good guess? You're not holding it long term; it's much shorter.
Well, if you had bought, there's a lot of stock. Like, so I just read a stat that if you would have put 10,000 into Zoom in 2020 when it was going crazy during COVID, right? Zoom the stock. It's worth $6,000 now. that your stock you would have lost 40% on, even though it had gone up tremendously along the way. Stocks, some of the biggest names over the last 5 years aren't even up. And so, like Disney is actually an underperformer, although it's such an incredible stock. And they came out with Disney Plus and they advanced with the times. Now Bob Iger's back, but it's still an underperformer, right? So, when you talk about a portfolio, I believe diversified funds are the best way to go. Like, you're talking to someone who, when I started trading, I put my entire 401k money in the 90s into AOL. And it went up by 4x because
Wow,
it was the greatest thing ever. Everyone used AOL until AOL became worthless. And I learned my lesson that you never want, whenever you think something can't lose, it can. Whenever you think there will be no competitor, there will be Blockbuster, Netflix, And I was like looking at the sign of the times, like AOL was the most used site ever until Google came along. And then Google destroyed AOL. I'm sorry, Yahoo before AOL even. Yahoo beat AOL, Google beat Yahoo, then Facebook came and beat that. And when you look at it from that point of view, there's always something new. Anyhow, so I like being diversified for the long term. When it comes to options, what we're looking for is short-term predictions, but with high probability of success on the trade.
So that's what I wanted to know.
So there's mathematical formulas, and I've learned this from other people. This isn't my teaching. This is what I've learned. The optimal delta is the expected change in a stock. So the 30 delta level is the expected move in a stock in any given time period. So if I look at Uber right now, if we're going out to next week, the expected move in Uber is $1.56. So when it's trading at 28.30, the 30 delta would be like between 27 and 27.50. But if we went out to June on the same stock, the 30 delta is now going to be 25. So it's expected that there's a chance it can move 5 points in the next 6 months. That's the expectation. So the optimal price to sell options is at that 30 delta, because you're collecting as much premium as possible, because the closer you get to the strike, the more money you collect. You're collecting as much premium as possible while staying within the range that it's not expected to go past. So that's the math of options.
So as simple as that sounds,
it's not simple.
No, it's not simple at all. I'm being totally. Who should not mess around with this?
I think anyone can learn it. I think you don't want to, like, if you take someone who's super successful, it doesn't mean they should start with a lot of money. I think everyone should start with risk capital, get proof of concept. The way I do it, and you've seen this, the way I teach it, I try to pretend like my family's on the call. That's how I always do it. And when I do that, I expect that they won't understand everything I say. and I'm going to have to repeat myself, and I'm going to have to answer questions that I know the answer to really easily, but I understand they don't come easily to others. And then I'm going to have to spoon feed it. So how do I spoon feed it? I go over the written instructions. I present an image. You follow it all along, and it all starts to make sense the more you do it over time. And that's just like anything else. And I was just talking to you about my daughter. And, last year she tried out for the basketball team, but she didn't practice at all. Right? She just showed up and tried out, and she didn't make it. And she's like, "Why didn't I make it? I'm good." I'm like, "Because you didn't practice at all." And now this year, she's going every day, and she's working on her game, and she's taking lessons, and she's putting in the work, which should lead to a better outcome. Right? Doesn't mean you'll be successful, but it means her likelihood of success is more. And I think that's with anything else. So who should do it? People that are going to put in the work to learn. You can't show up, throw money in the market without knowing what you're doing and expect to succeed. But if you put in the work, if you show up for the calls, if you take the time to learn it, if you ask questions, and you're disciplined. The one intangible is discipline.
That's a big one.
Yeah,
that's a big one. The discipline is huge. Anything you do, but having experience, I didn't know a service like yours was out there until I kind of stumbled on it, but I thought it was the coolest thing in the world. And we both know, we're not here to sell my services or yours, but it is very cool that for somebody who wants to, anybody out there who wants to just get involved, right? You don't get it, but you want to get involved, that there's a way, there's a community of people that exist where even if you don't know what you're doing, you can put the time in, you can learn, you can begin to understand. And I think where I was going with that was maybe who shouldn't do it. People that really have no tolerance for risk maybe shouldn't do it. I mean, you could lose some money, but that kind of segues me into, isn't it? I think I learned this from you guys. I think 60% of the time you win, 40% of the time you lose. So you're winning more than you're losing. And if you're consistent, you're making money. Did I learn that from you guys?
I think our numbers are higher. The way I do it, it's like 70%
really?
of the time you win. Yeah.
So it's that consistency. And because there's an actual model. So who should do it? Maybe it's somebody who is persistent and who's able to follow instructions and can do it over the long period and take some losses, knowing that you're going to win more than you lose. Yeah. And be happy with small wins over a long period.
Well, it's interesting. So your background wasn't in trading.
I still barely get it. You're doing me a service.
No. So you've been doing it
in IT.
You've been doing it for 6 months, right?
Yeah.
So the most recent trade we made in our group was Amazon.
Today.
We closed it today. Yeah.
Oh, right. That was the other half today. Yep.
Yeah. Now, did you put that trade on?
Yeah.
Okay. Did you understand what your risk was when you put it on? And you can be honest. Yeah.
I understood. I thought I did until I got the second part of it. There was I didn't understand the second thing I was told to do, even though I did it.
So we closed half the trade?
There was a name for it. I forget what it was called. There was a strategy.
Wait, are you talking about the new trade today?
Was it Condor? Is that what?
That was the trade in Apple that we put on today. Yeah. That's a new trade that we just started today. Yeah. That's an iron Condor.
Yes. Okay. Yeah. So I'm confusing things already. I'm telling you.
Amazon was the trade we put on last week.
Yes. And I sold half of it, and the other half I sold today.
Yes.
Yeah. Did I understand that totally? No. I definitely didn't understand everything I was doing.
And only the teacher in me will correct you a little bit, but I think you're okay with it. You didn't sell it today. You closed it.
I think I did buying
and selling to close.
I bought to close and sold to close.
Yes. So you did both. So you just closed it. I'm big on the lingo. So
you go.
With options, you're selling, you're collecting a credit to put the trade on. All right. And what we did for Amazon was a bull put credit spread. So we sold the 82.50 put, bought the 80 put for protection. And as long as Amazon stayed above 82.50, we collected the money, and it was 68 cents on 4 contracts. So it was a couple $100. Amazon went up to 89. We were able to buy some back for 29 cents right away, put that money in our pocket because we sold it for 68. We bought it back for 29, closed that spread. And then we closed the rest today for 8 cents. And we didn't really need to close it, but there was still a week to go in the trade.
Right.
And most we could have made was that 8 cents, but we would have been risking 250. So we closed it. but that was a chance. That was a trade with over a 70% market just closed. That was a trade with over a 70% probability of success. We hit, and but I like to think you knew that if Amazon went to zero, you weren't waking up with the full loss. You knew what your risk was. As well.
No, I knew that. That I knew 100%. That's why I like this whole strategy. I never feel like it's the risk to me feels much lower than what I thought it would be before I was doing this with you guys. Before I did some stuff. I did a trade once. I had no idea what I was doing. I bought calls and puts at Citibank, and this was back in 2010. And I had both. I still don't even know what I did because I can't even explain it. All I know is I was sitting on the beach down in Cape May in Jersey, and I had my BlackBerry, and I'm refreshing. And something happened, and I'm like, oh, shit. And I sold everything, both sides of it. And I lost like $30,000 in 2 seconds. And I was scared. That was the last time I ever messed with this. And that was until I started working with you guys. So that's 20 years ago, whatever that is.
Welcome back. So, no, it
scared the hell out of me.
I've made every mistake in trading there is. That's what, when I got into teaching people, when I got into newsletters, I told you I stumbled into it.
Yeah.
The very first thing I thought was like, am I qualified to teach people how to trade? And so I went and I started listening to other people talk about trading. And after I heard them speak, I was like, oh yeah, I'm qualified. like I know I can teach this. And then you realize that all the mistakes the goal, as I think as an educator, in anything is to sweeten the learning curve, to say, hey, it's taken me years of making these mistakes, and I want to teach you how to get started and skip over as many of these as you can.
You know what's interesting about that? At first, when I discovered you guys, I didn't believe it was true. So this is like the public. This is just the public's point of view, right? When something seems too good to be true, it usually is, right? So I mean, obviously there's a fee for things, but I still didn't believe it was true. I'm like, why would somebody at this expert level with all this stuff that he's done, like, why would somebody do this? And this does sound like an advertisement for Adam. It's not, but so I'm like, why would he do this? But the cost was like reasonable enough. I'm like, you know what? Let me give it a shot. And what you just said is true. Like, you guys, it's so awesome that it's a community where we really do learn. Like, it's all about education, and we're having fun and making money along the way.
Right.
And it's like, wow, this is for real. This guy's the real deal. Like,
I truly love it. And specifically some of those services, it's set up in a lifestyle way where I come on, I speak to a group of people, we talk about trading for an hour, and I'm exactly where I want to be. And I'll say this just to go even further. I don't know. I actually sold the business, the Adam Mesh Trading Group, in April 2021 after 16 years. There's a company called Tiffin that bought it, and they had all different divisions, and they wanted to be more in touch with the individual traders. And I had an email list with over 1 million people on it, or email list that equaled over 1 million people, not one list. It was split up into 17 actually. And now it's a part of Magnified Communities, right?
Right.
And I still do these services because I love them. Like, and I don't even have, like, it used to be like if I sold them, I was the direct owner. I directly benefited from that sale. Like, now it's set up where if there was one person on or 1,000, it doesn't make a difference in terms of my compensation. That's just being honest. So it used to be like when I owned the business and I sold it, it's like, oh, what's your motive? You want to make money or whatever? And I always said to people, I'm like, yeah, I'm good at this. I deserve to make money, but I want you to make money too. And we're going to have fun. Now it's really just, I enjoy it. Like, I'm literally doing it for love of the game. And like, you could probably tell in like,
I can tell when you're talking about it now, even the way you're saying it.
It's like there's only upside. Like, it's totally relaxed. Like, everything I do is zero pressure. And it's more fun that way.
You talked before about discipline, and there's something that I watched the few boot camp videos you guys have, and there's the idea of the consistency of the size of the trades. Like every time we do like 3 contracts, and I think I was talking to one of your people at one point, and he's like, no, always stick to that. It's be consistent with that, because if you start to go all over the place with that, it messes up the strategy,
Right.
which I totally get. And so on one thing, I'm like, you know what? I doubled it. I'm like, well, maybe I'll get lucky and I'll make more money. And I screwed that one up. That was the only one I screwed up, and I didn't follow the process. I wasn't disciplined. I had a moment of that, like, let me see if I can, do something different. And it's true. Like, we do need to follow a process and have a plan and stick to it, and like not look to make the quick money. I mean, would you agree with that?
Well, what you just said is so true. What happens is when your size becomes bigger, then your emotions come in and your discipline gets thwarted. And now you might be like, oh, this trade's bad, and you close it too early, or you try to maneuver it, and you're not consistent. But if you keep it just below the level of actually caring, we're like, I hope this works. If it doesn't, this is what I lose. I understand it. And you're never going to go to bed worried about how the market's going to be the next day. You're going to be successful. And by the way, I'm still guilty of that. It's early in this year, so I'm just so good right now. But like every year, I'm like discipline, and then I'll do something on my own. It'll be like, I still remember last year we were supposed to fly to Florida, and the tickets got screwed up at the airport. Like, I don't remember what it was, but like something American Express. We bought them through American Express, and they didn't confirm receipts. Whatever it was. My wife went with one of my daughters, and me and the other 2 kids had to go back to New York for the day. And so I just started trading. But I was already in a bad mood because my flight got canceled. But there was a lot of stuff going on in the market. I remember I was trading DraftKings after earnings. And I just got so much size. And it was an emotional day. Like, I was like annoyed I missed my flight. I wanted some action, which is never how you should be trading. And I just sat there, and next thing you know, I lost like, it used to be a lot more to make me say this, but like now it's like I lost like 12 grand. And for me to lose 12 grand, that used to be normal when I was trading every single day, millions of trades a day. Now for me to lose 12 grand means I did something really stupid, which I did. I took on size. I didn't follow any of my rules. And then, it doesn't work. And by the way, a couple of days later, that would have been worth 50 if I held it, but I didn't deal with it. But my point is, that wasn't for the services. That was just for myself. So I'm still prone to that. So I'm the biggest believer that you have to keep your size small, make a lot of little trades, and never care about just one. Never care about just one,
Yeah. And so I was surprised, like when I learned that was the system, and so now I watch them all, and I don't know, I guess you mentioned before that the percentage was pretty high. Like we are doing this today, and we are just kind of shooting the shit here, because I'm hoping that we do reach some people that maybe are apprehensive and aren't sure how to go about getting involved. Number one, to know that there's people like you, whether it's you or somebody else, to know there's people out there that are truly there to educate, and that you can slowly make money over time, and it starts to add up.
Right.
And so I'm watching my little wins, couple hundred, then a couple of 700, and all of a sudden it's starting to add up. But I'm not doing bigger bets. And I'm winning most of the time.
Right.
I am winning most of the time. To give you credit, I'm winning most of the time. And the system works. And you didn't invent the system. You're just consistent.
And you want to keep it at the point where you enjoy it and you're still doing other things. Like, you're able to do this interview with me. Now, we heard the bell, so we know that the market closed. But if you had too much size, you wouldn't be allowed to do those other things you care about. You'd be like
worried.
I can't be doing an interview when the market's open and I'm moving around thousands of dollars. I like people to listen. I don't think trading is a hobby. I never view it as a hobby, because a hobby is something you spend money on. Golf, tennis, whatever it is, they cost money. Trading, I want to be a source of income, but I don't want people's expectation to be that it will be your primary source of income. And I think the lifestyle that goes with it being your primary source of income makes it not worth it to try and achieve. So, I don't like people to go in expecting that next level of success, because what you have to commit to get there in terms of money and time might not be worth it, versus where you're at now, where you understand more than you did before. You know, when you're growing in your level of experience and understanding of the markets, and you can make money every week, it's fun. And that's what I want it to be.
It really is. It really, and it doesn't take a lot of money to add, what I'm seeing, my experience now with you guys, to add $1,000, $1,500 a month to be.
No.
It's not, you really don't have to have a lot of money. And I wanted to just touch on that because I think that might have been a question that somebody might potentially have. Like, well, what do you need to get started? How much do you need? The reality is, like, I don't put much into this, like, at all. Like, I mean, a couple, what's in my account? I mean, I have a lot in the account, but I only mess with a couple $1,000.
Yeah, assuming this is it's like, what are your obstacles standing in your way of trading? And assuming that it's risk capital. I always tell people, if you're deciding between putting the money in the market or paying your rent, pay your rent.
Right.
Assuming it's risk capital. Say you start with 2,500 to 5,000. It's a great amount to ease in with. What are your other obstacles? Time, right? So you see it. It's not a lot of time every week once you understand it.
2 minutes of my time.
Right. So time is not a lot. Money, which we just addressed, 2,500 to 5,000. Alternative options, like what else could you be doing with that money that would grow it? And then the biggest one is fear of the unknown. And my goal is to target that fear and say, if we could replace that fear with knowledge, then you'll be confident. And if I could get someone that was afraid to the point of, I think I could do this, then they're on their way in the journey. And that's fun.
And when you drop them, that's so well said. And when you drop them into a system that just like logically makes sense and it just works, and you start to see the little wins, that builds confidence too. It's like, oh, okay, you're going to win, you're going to lose, but you're going to win more than you lose, so you're winning. I mean, that's all we're talking about here.
And you have people that will go through your program, and then these are the best, the ones that outgrow me. And then I get emails like years later, like, hey, you got me started. I'm not a member of your community anymore, but this is what I've done. And here's my trading setup and all the success, which is cool. And like, that's it. Like, you incorporate your own personalities into it. Some people are with me forever. They're there over 10 years because they're getting good ideas. Why leave them?
Honestly, it's just easy. Like, I don't have to think about it.
There's nothing better you could ask for than someone to become better than you and make
just don't go anywhere.
What? Yeah.
Just don't go anywhere. Now I'm used to having it there.
No, I'm in this. I would never be good not working. I love working, and the services I set up and the way they're set up is something that I plan on doing for a really long time because I enjoy it.
I should have said at the beginning that everything that we're talking about, there's sort of that there's an important fact. We're not telling anybody here what to do. We're not telling them. What we are saying is get educated, connect with some smart people. Just know what you're getting into, and be smart with the choices you're making. I'm not sure there's a right or wrong way specifically. There's so many different ways to do this, right? But what we are saying is you can win. You can have a couple extra bucks in your pocket every month, and that can compound over time. So if you're maybe apprehensive, Adam just gave all the things you should think about to kind of get past those roadblocks.
100%
mindset.
And I think one thing you'd really agree with is, I could tell you would agree with this, is I always say if you're getting started, you're not going to go, and if you want to get in shape, you're not going to just start running marathons, because it's not a healthy way to start and it's not a repeatable way of success. But if you just started setting aside 5, 10, 20 minutes a day, it's a repeatable routine. And I think whether it's trading or anything else, if you put yourself in a repeatable routine, you're going to have success.
And that's it. And that's what you guys do. What else might we finish up with that somebody out there might be thinking that it's that average guy? Did we miss anything? Is there something we should have talked about that we didn't?
I'll leave you with my favorite expression. Okay. And this was one of my first mentors in business taught this to me. And I find myself saying it all the time, which is simply, you don't have to get it right. You just have to get it going. And that's the attitude, that it's more important to get started than get it right at the beginning. Like, just start and get
Brilliant.
the biggest step.
You know what? We should also, God, that was brilliant. I love that. Thank you. We should also touch on, it doesn't matter what direction the market's going for this strategy to work, to be in options, up or down, sectors, like all the nonsense we hear like on CNBC, which I don't even watch because it's too much nonsense. It doesn't matter. There's always a trade.
And you saw that last year with because you joined in probably congrats on joining one of the worst 6-month stretches of market history. But
I joined last summer,
and you're still successful.
I made some money.
Yeah. Cool.
Listen, I really appreciate you doing this. We're doing a service, and you're all about educating, and that's what I'm here for. So you're a really humble guy, man, and I appreciate it. And you come across just so genuine and authentic, and you're the real deal, man. Is there anything you want to share with anybody about you, your company, how to reach you, websites, books, anything?
Anyone, I'm very personal. Anyone who wants to get in touch with me could just email adam@adammesh.com. I respond personally. But more importantly, I said yes to this when my team reached out without knowing that you remember the community, but that made it more fun. And now I'll look out for you on the calls. Okay.
We had no idea. Listen, have fun. I know you got to go take care of something with your daughter. Thanks again. I appreciate it, man. We'll talk soon.
All right. Be good. Thank you.